All right, welcome aboard, guys. It's Ken at Tortoise Capital. This is the Friday night strategy podcast for Tortoise Capital for December 4th, 2020. On Friday nights, we read the weekend report after a quick review of the daily trade. So let's see what we got here. We've got a 10-day range. It's about 4% from the 10-day high at 370, which was made today. We made a new 10-day high, 30-day high, and all-time high today at the close. So the little doji action that we've been having this week sort of resolved to the upside, and people were willing to hold an all-time high, and they bought that in the last half hour. That high was made in the last half hour, and that was people wanting to own it over the weekend. And so I'm expecting probably the least surprising scenario would be a gap up on Monday, with a lot of weekend market orders buy at the open being placed. And there will be some people that want to sell them that at a higher price. And so I'm expecting a gap up and then an early test. So we'll be mindful of that and ready for the hybrid frog with a quick reversal. A gap up, sell off, and then a quick reversal. That will lead to a Kata 2 trade when that market makes a low. And then we would play like an SSC, the supported spring crossing. So that's my scenario. The price came up even with the RL30 extension today, so it's right on the cusp of becoming an A trade. It's comfortably above the edge of the dragon in the Z1. The PSAR today was at 358.86. Monday, it will move up to 360.5. So we have a good, comfortable series of support levels between today's close and then the PSAR flip. For me, I would still be taking about a 2-day low as my wiggle room. I only want to give it about this much sell-off room from 370 down to about 365. So that's about so $3. Was it $5? $5 on 350. So that's about 1.5%. It's a little more than one ATR, but I want to lock in the gains of this last move of the last 10 days. So because I'm seeing this as the third leg. So if we take this as the first leg up from the sell-off to cross the river, and then the second leg up was from the Z1 all the way up to this peak and then a pullback, and then this is the third leg. This is really quite an extraordinary move. The 30-day move on this has been 13%, and that's pretty good. So I don't want to give back much more than about 1.5%. That's only, I'm willing to give back about 10% of that total move on this leg up, which equates to about 1.5% of actual retracement. Okay. The next, since this is an all-time high, there is exactly zero resistance above, and the next checkpoint would be at the Z2, which is at 377.5. So there's, if you can get through 370, then there's about a 2% move to the edge of the floodplain at 377.5. So all systems go. Let's take a look at the sectors today. And I got to be done here by in about 20 minutes. I got another session at 9 tonight, so we'll get through the weekend report here in a minute. So in yellow, we've marked off the 4 U.S. indexes that we track. The S&P was up 0.85% today, slightly better than the Dow, which was at 0.81. The Treasuries sold off today. They're back down to 155 and they were down 1.5%. So the S&P up 1%, basically up 0.85. And then the Russell was very strong today. So this is the speculative broad U.S. market. This is a risk on trade that they were willing to hold over the weekend, and that was up 2.3%. So 3 times better than the large caps and the Dow, and just left treasuries in the dust. All right, let's work our way through the green marked sectors then. So from the sectors, we had oil, tech, XLK, healthcare, XLV, and emerging markets all up about 1%. So a little bit better than the S&P in that block. And then the second block in here with finance, the triple Qs. Wiz is that the AI ETF. It's artificial intelligence bull and bear riders. Brazil up 2%. Clean energy up 2%, back to 89. And then materials up 2% altogether. So another nice, pretty broad-based cluster of outperformers. So this was a broad-based set of gains. And so finance, materials, Brazil, that's all good. The next group of really well-performing sectors were SLX. I have been tracking that anyway in my own portfolio, but SLX is a steel ETF, and that is a more narrowly refined ETF, sector ETF than XLB. We've been using XLB as the proxy for all our steel companies, but they've been doing so well that I wanted to add a tightly focused ETF on steel into our stack. So SLX was up 4.7%. Simon Property Group, which is our proxy for mid-cap commercial real estate, 4.8. The Broad Energy Spider, 5.45. And then oil exploration, 8.5%. So that was pretty amazing. But what was really amazing today were some more of our old reliables. There's U.S. Steel up 9.6%. At one point, it was up 11.5%. And that's a stock that we were tracking at 7, and it's now almost at 17. That's 150% gain in U.S. Steel over the last 3 weeks. So paying attention to swing trade moves of the sectors and then their components can certainly pay off. And here's another example. Energy was strong today at 5.45. Devon Energy, our mid-cap U.S. Domestic oil company, 9.25%. So both of these just had massive moves intraday, very strongly trending, and the hybrid frog and the supported spring crossing trades were just excellent there. Alcoa was very good at 7.2%. Cliff Natural Resources, Nucor and Caterpillar in the industrials up 3% and 4% and 5% each. So getting the sector right made you very happy today. What you're not noticing is a bunch of the tech names here. These are all the great American companies: U.S. Steel, Devon, Cliff Natural Resources, Wind, Caterpillar, Nucor Steel, DuPont Chemical. The first tech name that you really see in there is Virgin Galactic at 2.3. All right, let's take a look at the downside. The underperforming sectors today. The QLV is one that I added earlier this week. This is a ETF that is a style ETF, and it focuses on quality companies that are low volatility. So they're the fundamental screen on this thing, you can look it up, is companies that have very strong balance sheets and projected earnings and stable earnings growth rates and dividend payouts, and have less than average price volatility. So these are stable producers. So that's the story of XLV. So that's slightly underperformed the market today at 0.4%. Silver and Mexico at 0.2. The FANG companies, so this is Facebook, Alcoa, Alphabet, Netflix, and Google, were basically flat for the day on a day when the S&P was up 1%. 0.5%. They were flat. So this was a move away from tech and more into the broad-based value companies that are going to rebuild America. Wheat and precious metals. Wheat and precious metals down 1.2%. VXX 1.75%. Bitcoin down 3%. 3.25%. And then the companies that got smashed today, NIO continuing to underperform Tesla in the electric vehicle space. Boeing 2%. Home Depot continues to suffer at -1.5%, so we're going to be stocking that one as a value play going forward. And now here's all your tech leaders. There's Amazon, Apple, Nikola, Twitter, Microsoft, all underperforming. Our bellwether for the advanced tech, Tesla, that special play for us was up 1%, so slightly better than S&P. Musk announced that he's moving to Texas and moving most of their operations except maybe one R&D plant back in California, and that's going to be good for their stock and good for their business, good for America. You cannot tax your way to prosperity. All right, so that's what I want to cover today. Let me see if this is going to cooperate. I'm not going to go through the all the details on them, but this was the move in U.S. Steel today. Just extraordinary. You know, you can. I'm just going to run through that real quick. You start off the day with a hybrid frog, which pays off and gets the normal exit at the Bollinger Band main. You then get a supported spring crossing, and your entry is at 1590, and that thing never looks back. You would probably, if you're following the Wu Wei exit, you get an orderly exit up here at about 1690. So that's a 7% move just on the first position. And so from a position sizing perspective, you know, the standard risk for us on this would be to the PSAR dot. You're talking about a 20-cent risk with your stop there. That's about a 20-cent risk, and you're making $1 on the first position. So that's 5R. And then if we add the standard reentries, you either get this one, and then for sure, and then you might end up picking up this one as well. So that has all the markings of a 10R intraday trade on U.S. Steel, behaving like a growth stock. If you're an aggressive intraday trader and you want to play the reverse side on the reverse back to the VWAP, you might have gotten the taste here at the end of the day. But I also want you to notice that even afternoon there was a nice retracement trade. So this is a supported spring crossing because you have a Z3 pinch, you have the fake one go 2, and now you're getting in at 1660 with a 10-cent risk, and then you're cashing that up here in the last half hour at 1690. So there's another 3 to 4R in the usual way just on the first position up in here. So U.S. Steel was just out of its mind good today. I want to show you in Tesla the afternoon trade. So it was kind of chunking along the VWAP here, but I take this as a strong vote of confidence that in the last half hour there was heavy volume buying Tesla into the close to have it close at 599, ready to test the key level at 600. And so I think that's going to be postured to really move next week also. Now, to be fair and full disclosure, Danny just posted a long-term swing trade short option trade on Tesla to take advantage maybe of some excessive joy in Tesla. But I'll be posting the link to his options analysis because I I always read whatever he writes. It's a very solid analysis. So just wanted to show you what a strong move U.S. Steel had. And then this is the Devon Energy in the energy sector. And again, that's trading this in the usual way. You're getting hybrid frogs here. You're getting second positions on the supported fall crossings here, and a re-entry here, and then one more strong move on a supported spring crossing there. So all of the usual suspects were moving out sharply today, and we're definitely rewarding. And I want you to notice that steel is not really this is the new the steel sector ETF. So this is one that if we want to play a swing trade in steel, we can. It's not suitable for intraday trading because of the lack of volume. So that's why I use XLB, and then also the individual companies that are very liquid. But still gives us some nice insights into what the aggregate performance of the sector is doing. Plus, it gives us the ability to drill down into components and then focus on maybe some of the other metal companies. Okay, so that's what I want to cover in there. So lots of good trades today in the usual way. All right, I want to shift gears now to the weekend report, so we can get our mind right. We got about 10 minutes before I got to pull out of here. All right, so the weekend report's available on Patreon for you, but also in the handout section for those of you playing at home. There we go. All right, so the weekend report for December 5th. And again, we'll do the Q&A session and the discussion session is going to go tomorrow at 8. At the 10 o'clock meeting for the OWL Story Group, that's a non-trading session to exchange true stories. I posted the invite in Patreon, and you guys are welcome to come if you read the rules and it sounds like something you would be attracted to. We're happy to have you. That's going to be on Zoom, not in GoToWebinar. That's the Zoom link is on Patreon, and in so it's so that we can see each other's faces a little more easily. And then we're going to have the first of the OWL Mastermind, the pro money managers that are getting together to start exchanging swing trade frames and all that. We're going to be kicking those things around, and my intention is to summarize those and present what we do tomorrow night at 8. But the inaugural meeting of that's going to be tomorrow. We're going to start doing that every it looks like every Saturday, and making that available to the silver subscribers in Patreon, because we're going to be focusing on swing trade and longer term position trades. I just think we need to get better at that. As the administration's transition, we start getting back into what rebuilding America means. I think we're going to start seeing a differentiation of winners and losers in the companies and in the economy. And so that's going to be tailor-made for target selection of swing trades, which I think we can take advantage of. Excuse me. So that's going to be our focus with that group. So what we've got is a market that has gone back into bullish quiet. It's overbought on every dimension. It is green bullish on price relative to the 200-day moving average. The ADX is still a neutral. respectable 20.6, so it's not it's not parabolic by any means yet. The ATR percentage is in the quiet at 1.03%. Just remember, 4 weeks ago, that was up at 2.5%, and it's done nothing but relax after the election and the split Congress, and that's good for business and good for the nation. The warning is still in place from the risk Z, however. It's the Z score is up around 2.04 standard deviations above the long-term average, and so that's a natural place for it to roll over like it did here, which means that we could see some pause on the gains. But for right now, we are still favoring the long side. We can take swing trade positions, but at such an elevated Z score on the risk Z, that means you want to be selective and treat your stops with respect. And it's definitely a bird in the hand is worth two in the bush right now. Our theoretical, that's right. The blended monthly rebalancing happened this week, so we are now holding these ETFs based on which ETF portfolio package you're looking at. ETF 13 is holding Latin America, Russell small caps, and emerging markets. Those are positioned so well right now, holy mackerel. And then PBW, Latin America, and the Russell 2000. That's really a growth exposure and should do pretty well going forward. And then you can see the individual components of other portfolios down here as well. ETF 2 is long and strong at the 100% in the portfolio. On a monthly basis, we had a terrific November and into the start of a really good December. For me, 365, that monthly low is where I'm drawing my line at, because I want to preserve the gains that are up here right near Z3 on a monthly basis. I don't want to give any of that back, and so I'm going to try to maximize that. I would also understand a support level at about 355. If you wanted to give it more room, then you're using the Z2 line. Otherwise, the skin of the dragon would be at about 340. The spine of the dragon down here at 325, and the 2 monthly lows, or the bi-monthly low, I should say. The bottom of the dragon plus a PSAR right here at about 310.